I think we are trying to become the most comprehensive finance platform for retail investors. I was at Reuters using this institutional platform, but then I was going back to TradingView to actually do charting. We're now the 73rd largest website in the world.
Welcome back, everybody. Another episode of the Expert Trader podcast series hosted by Chartaddicts. We have an incredible guest in the building today, and I'm shocked I'm even saying this. We have Crosby, General Manager, TradingView, investor, entrepreneur, and financial technology expert. Pierce, thank you for coming on the Expert Trader podcast.
Thanks for having me. Great to be here and great to be on a podcast with fellow traders, for sure.
We're really excited to have you speak a little bit about your life, a little bit about TradingView, its growth. And you joined TradingView in one of the most unique times where I feel like there was a huge flow of retail trading that came into the market. So I'm excited to see it from your perspective and for you to walk us through what's happened in the past 3 years. But first, can you walk people through your backstory? Santa Cruz, Colombia, Reuters. You kind of want to give people a brief history on yourself?
Yeah. I'm always happy to give a synopsis. I have a pretty untraditional route, so it's always interesting for people to hear this story because they always kind of freak out, like how does some kid from Northern California actually make it to one of the biggest trading firms in the world. So I'm from Northern California. I was born and raised to pretty alternative parents. Basically, we grew up like in the actual woods, like off the grid. And most of my early years of California was all about kind of living simply, living alternatively. And so I went to school in Santa Cruz for studying politics and economics. It was an interesting time because back then it was kind of right after the financial crisis happened, and I was in school while the financial crisis was actually happening. And so I got very interested in economics, trading, finance in general. So fast forward, after Santa Cruz, I went to Colombia to study finance and investing, as well as actually get into writing and reporting as well. I ended up becoming a journalist at Reuters, basically working for the financial column, covering very, very unique hedge funds, a lot of market making activity, and a lot of the backroom conversations that were happening on Wall Street, post financial crisis, when people were kind of trying to figure out where the world was actually going to go, what people were going to invest in the future. And so it was a very interesting time to be kind of at the heart of really Wall Street. And then, I definitely saw the writing on the wall in terms of working at a very big company versus, starting something fresh. And so, I did my time at Reuters, but I was always kind of interested in starting my own thing or trying to figure out, how to build an actual business. And so there was a friend of mine that I knew from Twitter. His name was Howard Lindsay. And he's a pretty prolific trader and investor. He had a hedge fund back during the financial crisis as well. He actually hit me up on Twitter and said, "Hey, listen, I'm building this company called StockTwits." And I said, "It's super interesting. I've been on StockTwits. I know about it. I was like contributing articles to Seeking Alpha on the side at the time, which is really funny because I actually wrote that people should buy the Tesla IPO, like a pretty controversial piece at the time. And obviously people would have lost money. And then turns out if you just hold long enough, it would have been a very interesting story. So anyways, I ended up joining StockTwits in New York as their first employee in New York, and basically a seat at the table to build a business. I worked there for 5 years. We scaled the team to about 50 people in New York. And, I kind of outgrew the space. I think I really, wanted to then build something bigger. And, StockTwits is a great network for kind of really, really active traders. But beyond that, I think there was some limitations in terms of like fundamental investors, long-term investors, and, technical investors as well. Mm-hmm. And so, I'd known TradingView for a long time, and basically, they had been talking to me about, the idea of building out the US team, but also building out the kind of global team and global footprint. And I said, sounds interesting, like want to hear more. And, fast forward to today, 3 years later, basically, yeah, it's a great mission and journey. And when I joined, we were about 120 employees or so. We're now just breaking 400 employees. So wow. Safe to say it's been a very, very vibrant 3 years. And definitely my sleep schedule, personal life is totally out the window, but we are building a pretty substantial business, and that all led to where we are today.
Sleep was the expense, but you guys got 20 offices worldwide, $3 billion valuation, if I'm not mistaken. Is that roughly accurate?
Yeah. So we went out, and I was very, very happy to run the process on last year's fundraise. So we raised $300 million, well, $298 million at a $3 billion valuation.
Wow.
Kind of catapulting us to, one of the most valuable kind of investing companies in the US. Still early days, but ultimately very, very excited to be validated by the likes of Tiger Global, as well as a couple other key firms that participated in the round. It's a very kind of big step for us in the sense that we are now kind of a unicorn company, but it is still very early days in the sense that we basically didn't take a lot of time to do the fundraise. We basically just got it done because I wanted to get it done. Besides that, I think that we very much just wanted to, get back to business. So yeah, we're very excited, and growth maintains a very, very strong clip, even with some kind of macroeconomic headwinds. And so yeah, we're very, very bullish on kind of the long-term vision, and broadly speaking, we think that we're just getting started. Right now.
So I'm really looking forward to diving in deeper into those trends that you've been seeing over the past few years. I had a quick question. And you said that you knew the TradingView guys, or that you knew of TradingView. Were you actively using it at the time?
I've been a long-time TradingView user. I think so. The story is the company started in Chicago in 2012. That's right around the time when I was looking to leave Reuters. And so I was actually just kind of on the web, and actually, there's a guy, Barry Ritholtz, who runs a wealth management firm here in New York. He actually wrote a blog post in 2013, and I think it was titled something like the new technical analysis charting platform, TradingView. Check it out. Super simple blog, and that was one of the moments where I was like, "Whoa, this is actually really cool. There's like a ton here." And wait, it's actually free. And so I totally took it up and more or less started using it in my daily kind of workflow. Because at the time, Reuters, which was owned by Thomson Reuters, Refinitiv, which is now today kind of owned by the London Stock Exchange, they had really terrible charts actually. So I was at Reuters using this institutional platform, but then I was going back to TradingView to actually do charting way back in the day. So
right.
It's funny world how this retail investing platform actually had better charts than one of the most institutional trading platforms out there in the space.
So since most of our users, they also interact with TradingView on the charting level, because they go there for the quotes, they go there for the technical analysis. How do you see TradingView? Is TradingView like a Bloomberg for the common person? Is TradingView going to be something more social? Is TradingView for the charts? How do you view TradingView?
That's a great question. It's definitely dynamic, and what I mean by that is our ambitions are always getting bigger, I guess. So I think that if you ask the founders that when they started the company in 2013, 2012, their mission was to be a charting product. However, in a more recent term, not only am I bringing kind of the experience of the social world, but a news background. Our CMO is also a very heavy media and content guy, and we're actually building a video show on TradingView, and we're also doing live streams on TradingView. And then a lot of the folks that we've been hiring are more fundamental investors, long-term investors, macro investors. And so the mission has changed quite a bit. We realized that we kind of nailed it with charting, right? And that's kind of been where we continue to innovate. It's our largest product team. It's our largest engineering team. We basically have 70 full-time engineers working on just the charts, which is insane, but that's kind of why we maintain that level of competition. But beyond that, we have a ton of folks doing all sorts of nuances in financial technology, as well as kind of building new products inside this ecosystem. So overall, how would I describe TradingView? I think we are trying to become the most comprehensive finance platform for retail investors. So, and the reason I frame it as retail is the mechanics of the institutional world is very different. and broadly speaking, is something that we don't really have an interest in because there's only so few institutional investors, right? We want to be, in the market of millions of traders and investors, not in the market of, hundreds of thousands, but really not millions, right? There's only so few institutional traders, and they sit in Hong Kong, Singapore, London, New York, and Japan, basically. But besides that, there's not a ton of market share for that. We have investors and traders from 180 countries around the world, right? So if I, look at South Africa, or I look at, India or Japan or Turkey, Malaysia, Southeast Asia, we have traders literally everywhere. And trading global asset classes as well. And so that's definitely kind of where we want to be, is, the platform for the everyday investor. And, we may have institutional grade services, but we still want to focus on the individual. And that's 100% our mission. That's
awesome. And I think from a user's perspective, I'm just going to speak for some of the audience, which is, I think you guys have done a great job of taking that institutional advantage that most folks had using something like a Bloomberg platform with all the alerts, updates, some of the EAs that you guys have allowed on there, and some of the add-ons that you've allowed. I think it's really democratizing the ability for folks to have access to these markets, maybe not in like a transactional level, but in access to information, which is huge. What are some of the big partnerships that TradingView's had that have helped push it to the level that it's at today?
Oh, it's interesting. So for us, we partner with a ton of companies around the world. What's super interesting about TradingView is that TradingView is actually not just one site. We have over 20 language version sites. So TradingView Japan is actually a completely separate website and operates on its own, has its own social network, has its own features, has its own tools. And likewise for TradingView China, TradingView, Spain, or TradingView Spanish, TradingView Portuguese, and TradingView Turkish. Literally, they're all separate sites that actually, kind of run their own business. So across the globe, we have a huge diversity of partners. I would say, for me, sitting in the US, obviously I have a bias, but we've partnered with a lot of the biggest brokerage firms in the world, as well as some of the large banks in the industry, to become actually their default technology provider as well. So obviously we have TradingView.com, right, which is where everybody goes to do their business. But a lot of folks, like a Bank of America or a JP Morgan, will never actually be able to use TradingView because it's firewalled with inside of their systems. So what we're actually doing is we're actually pushing a lot of our technology out to their websites as well, so that they could actually use a lot of the tools that we've built, but with inside their own environments, basically places that we can't otherwise access, because ultimately, there's restrictions around compliance or what have you. And so, a lot of the big firms have come around to the realization that they really can't compete on the technology front. And so they're sunsetting their products, or they're actually, in some cases, replacing the existing products that they license with licenses to TradingView. And so those have been pretty substantial for us. I think in terms of probably the most notable recently, I don't know if you guys saw, but on Monday, we actually just launched FTX. So what that means for international traders right now, and in the future, if all goes well, and there's a little kind of purview for you, so don't blow me up too much, but we will be integrating FTX US. And so for US traders, they'll have the ability to trade on TradingView through FTX, which is something that we think of as pretty massive. We have about 25 or so trading partners that we've connected with. So all the brokers are slowly coming around to the realization that, we now have 37 million people coming to the platform every month.
Right.
And that is an audience that they basically need to get a hold of. They need to be in front of them. And so a lot of people have, kind of come to terms with the fact that, well, people can come to tdameritrade.com or Schwab or Thinkorswim, or they could go to TradingView and actually log into their broker from TradingView and then actually transact directly on top of the platform. And so those have been very substantial partnerships, not just because, it improves the overall product experience, but it also does signal to me, at least into the market, that, hey, this is the best way to get the next 1,000 investors to use your broker. And that's actually becoming a very obvious play for a lot of the brokerage industry. So I think that those are probably the most notable in my mind. And yeah, we've had a couple key partners like TradeStation that have really been big supporters of TradingView. And I know John Bartleman, the CEO, for many years, and he's been a very large contributor in terms of supporting the network and helping us build. But we're super agnostic. We try to basically be open to all partners in terms of folks that we can work with and bring to the table. I do know we have a mutual friend in the folks at Oanda, and so we will actually be announcing some new stuff with Oanda pretty soon. But we have Oanda integrated in TradingView as well. So basically people can trade, FX or various other commodities industries through TradingView and Oanda as well, which has been massive. I mean, they're actually one of the larger connections. I think they have something close to 70,000 connected traders on TradingView, which is pretty massive, and we'll continue to kind of expand that funnel for them.
Oanda is huge. So, I mean, the names that you're mentioning are some of the top in their game. So obviously FTX has some of the largest flows in the crypto exchange business. There's a few points that you touched on that I kind of wanted to go through. So first,
sure.
I feel like at this point, partners can't really ignore you, right? You guys are one of the top 100 visited companies or visited websites in the world. Is that correct?
We are now the 70, it's funny, I was actually talking to a friend earlier and he's like, how's web traffic doing? So I took a look. We're now the 73rd largest website in the world.
Okay.
So yeah, that means literally top 100 website. The funny thing that I always kind of joke about, obviously not really publicly, but in private, is we're bigger than Pornhub, and that to me is like the most substantial thing I've ever heard. Is like, wait, we're bigger than. It's like, whoa, I guess that's
You're definitely getting somewhere.
Like how we think about. Yeah, exactly.
That's awesome. Yeah. So partners obviously can't ignore you because everybody wants to be part of a company that has that many eyes. When we had the founder of Oanda on the show, and he was talking about integrating some new technologies with some of these legacy banks, because he had some of the largest banks in Europe as his clients. And when they tried to push some more decentralized technology options that were more secure, they had a hard time transitioning because of how slow they were at adapting. So are you running into similar problems trying to talk to some of these legacy companies and getting them to understand the future? And do you think they'll be able to shift fast enough to adapt?
Yeah. Well, I mean,
that was a long way from the Pornhub.
No. It's a pretty interesting macro view, which is, basically can legacy technology providers and ultimately legacy financial technology providers keep up with this new wave of crypto and DeFi and kind of all these companies that have basically sprung up out of nowhere to service the larger industry, whether it's for lending, trading, et cetera. What I would say is they are willing to adapt, but the problem being is their current structure doesn't really support innovation, where most of their cost structure is around human capital, and most of their revenue is around trading revenues and kind of legacy systems. And so in a lot of ways, for them to innovate is to actually disrupt a lot of their business model. And the problem with that, of course, is at the end of the day, money is money. And, I think a lot of folks have had kind of a problem with the idea of foregoing revenue in the door when it comes down to innovation and building new business. Some businesses, and this is the thing, they're not all universal. So what's interesting is that some businesses do realize that, if they don't innovate fast enough, they'll become pretty obsolete very, very quickly. The problem being is, I think that most of the industry really thinks that, they can just kind of survive without things like crypto or without things like DeFi. And unfortunately, it's a bit, I think, short-sighted in terms of they don't want to, shake things up too much right now. But I do think that some players are starting to adapt. And so, it's interesting because the new entrants to the market, the FTXs of the world, are moving at such a breakneck pace. You kind of have, it's kind of like the chicken or the hare scenario. So or not the chicken, sorry, the tortoise to the hare, not the chicken. I don't know where the chicken comes from. So the tortoise to the hare scenario. So the tortoise is a bank, right? The bank is moving forward in a very slow direction. The hare is going to shoot past him, but ultimately there's a question of, how stable and how long term are some of these kind of hares where they're moving at 1,000,000 miles an hour right now, but will the model change? Will the business shift underneath them? Will there be a big downturn in the market or something like that? And meanwhile, the tortoise is slowly moving forward and slowly innovating, but still moving forward. And so I think that that's what you have right now. Very different players ultimately moving at very different speeds, both in the right direction. But ultimately, the biggest problem I think though is a lot of folks are looking at them as one size fits all. But the likes of, say, Goldman, they're innovating at a very, very fast rate relative to most of the banks. Whereas, somebody like a Stifel or a Jeffries or all these companies, they just don't even have the infrastructure to compete at the end of the day.
For sure. So do you feel like this is kind of a Netflix blockbuster moment for a lot of these companies where you can either choose to adapt and get on this new wave early, forego some short-term revenue for longer-term innovation, or do you think this is something a little bit different?
Well, it's the dichotomy is the same. It's definitely nuanced in the levers and mechanics of what's moving that business. The simplicity of the Netflix blockbuster analogy is always good to talk about because it's a very simple concept in the sense that one has decided to do delivery, the other one decided to stay as a kind of brick and mortar.
Could I rephrase it? Do you think it's binary? I guess to use that example, I would say you were either going to catch on to Netflix's model or you were going to go to zero. Do you feel like today it's binary? I guess that'd be a better way to phrase it.
Yeah, no. Both scenarios are fine in the sense that they present a question of whether or not companies can innovate, even in a very kind of binary scenario. What I would say is, in terms of companies that will continue to survive, there will be folks on either side of the fence that will continue to survive. And that's because what's interesting about crypto and broadly speaking, kind of the new wave of finance is that it very much is kind of the term Web3 is actually pretty apt in a sense because it's talking about the future of the internet, but in a way that's extremely narrow for most customers. So most people won't ever really know what Web3 is or use Web3, but folks that have always, been on the internet, you and myself, we're very much immersed in the internet itself. Web3 is very, very applicable to us. But, and this is the TradingView kind of opinion overall is while people are kind of innovating over here in Web3, the majority of the world is just getting around to Web 1. They're just getting started.
For sure.
And so we really have to think about in terms of our philosophy is that a lot of people are just getting started in investing, right? So Turkey is a good example. Also, India is a good example, and Brazil. These are three, also Nigeria, actually. So 4 gigantic countries with a very, very fast growth rate, a very, very young population. And really the concept of casual investing is still very new. It's within the last 15 years. Right. And what that means, broadly speaking, is that the opportunity near term in these markets is to get these people accustomed to the concept of investing first, before we even push into these nuanced conversations is crypto an actual viable model here? Does Web3 actually work in these kind of emerging market scenarios? Or, are we still focused around, actual web connectivity and literally the infrastructure to actually make any of this stuff work?
Sure.
And I think there will be big leapfrog moments. I really do like the example of Starlink, which is Elon Musk's kind of philosophy on internet connectivity and making these kind of boxes that are, kind of beaming you straight to the satellites, and then, kind of piggybacking on some of the connectivity from kind of the global web. Oh, did I drop for a second?
You dropped for a quick second, right as you were talking about connectivity. I think Starlink might have heard you, disrupted the signal.
Yeah, I know that's really what happened, right? No, I think so. In terms of connectivity, like I said, I think that broadly speaking, right now the story is still, creating universal access to the internet, and then from there we can have conversations about, universal access to investing. Then I think you can have conversations about universal access to things like crypto investing or things like Web3 in general. But there's definitely a staggered effect, right? And while we're in the US and it's a very different model here, we, especially at TradingView, are thinking about kind of the bigger picture. Yeah,
that's awesome. I really like the down to earth approach. Like all of your answers seem to have this really like down to earth, rational kind of approach, which is like, yes, these trends are accelerating, but we have to look at the broad picture. Most folks are still not in that system, and I really do appreciate that perspective. Now, if we're going to talk about the trend of casual and if we're going to talk about the trend of casual investing, you were kind of at the front seat of the 2019, 2020, 2021 inflow of retail trading due to the pandemic. What are some trends that you saw from the back end that are that stood out to you?
Well, so yeah, we, right place, right time. I think the TradingView has been around for many years. 2012 is when it started, but they've been kind of moving in silence for quite some time. And most recently, 2019, 2020 presented basically what you consider a catalyst opportunity, where you had a huge inflow of new investors who were stuck at home in a gold pandemic. You have the likes of Robinhood and pretty much every Robinhood ripoff you can imagine, not just in the US, but in all these countries around the world, basically doing the form factor of surpassing the kind of desktop model or the web model and going straight to the phone, right? And when you have that kind of form factor shifting so massively, in combines with people being stuck inside, bored as hell, nothing to do, and stimulus checks rolling around here and there, basically created what we call a perfect storm. And so TradingView was kind of well positioned to inherit a lot of that kind of wave of investors, because ultimately, something like a Robinhood provides a service of actually being able to buy or sell. But if you're actually an investor, you're thinking about this from a way different angle, which is, how do I actually do my research? How do I do my daily activities, my workflows, and what I need to actually become a successful investor? And so a lot of people started on a platform like Robinhood and then actually ended up transitioning over to a platform like TradingView. And that's just because, they need more. They need more tools, they need more information, research, et cetera. And that, in combination with the fact that crypto kind of came into its own, obviously we had a huge bull and bear market cycle in 2017. And then people started reinvesting in 2018, 2019. And, I remember, I think it was March 16th that Bitcoin went down to like 3K or something like that, and hasn't looked back since. I know, it's obviously retraced from like the 68K highs or something like that. But broadly speaking, crypto has been part of that parabolic story as well. So if I look back over the course of the pandemic, our growth rate, we probably quadrupled in size in terms of top line revenue. And most of that is all kind of flowed through to the bottom line as well, because, we've grown, but we can't grow fast enough from an operational standpoint. So our growth rate is, continuing to accelerate. And we're doing our best we can to hire as many people as we can, but we obviously run into very kind of specific growth constraints around talent in the market and who's out to hire and structure the business, et cetera. But it's been an incredible journey thus far, and it's been insane 2 years. Like I said, no sleep. That's kind of my philosophy right now, at least.
That's understandable for sure. Is there any asset class that you see people taking more attention on? Is it currencies? Is it stocks? Is it crypto? What seems to be the biggest focus for folks on the platform?
So it's a great question. Everybody asks the same. And the thing is, it's pretty well distributed. So obviously there's different growth rates for each asset class, right? So if you asked me the same question 2 years ago, pretty much the majority of the platform is FX and equities, split about 60-40, the 60 being equities and the 40 being FX. However, fast forward to today, about a third of our business is actually all crypto. And so what that means is not only is crypto becoming a big piece, but crypto became a big piece out of nowhere. I mean, it literally shot out of right field and became a large chunk of our total business. And so it's really kind of amazing to see how fast that adoption curve actually happened. 40% equities, 30% crypto, 30% FX. And the reason I think that crypto hasn't grown even bigger is that we're doing a lot for emerging markets in general. So keep in mind that, like I said, people in Brazil are just learning how to trade FX, or people in Turkey are just starting to trade equities. And so there's like a global scale that's actually growing, and crypto is part of that story. But in a lot of cases, people just want to invest in Apple. They know Apple, they have the form factor, they have the phone. They're based out of Pakistan, and they just got this app, and oh, it turns out I can now invest one share in Apple. And like that's a huge nuance to kind of where we are today.
Can you give a macro overview on what the future of TradingView looks like? So we can start globally, and then we can go to US specifically.
Sure. So, I mean, I think probably for global first, so a lot of the reason that we raised the 300 million last year was to focus on the global expansion. And the thing is we have clients or customers in about 180 countries all around the world. But if I go to Mongolia, I still only have a couple hundred customers and like that. What we really want to do is be the default platform in all these countries. And so we're not doing anything new per se, but really just kind of distributing as much as possible in these markets. Now, in the more mature markets, so I'd say the US, the UK, and Japan, Hong Kong, Singapore, kind of the global hubs where these are very emerged markets. These are very much stable financial systems, and very much places that have a culture of investing, which is totally different in different places. Like, if you go to the UK, culturally, they just don't trade stocks. It's just not something they do. And, we don't want to change that for them. We just got to adapt in that scenario. So, but in the emerged markets, we're very focused on becoming the full stack solution for a trader so that they don't need to go anywhere else. And so what that means from a tactile standpoint is a lot of things. So one, we have to integrate all these trading firms, as we discussed. But two, there's a lot of a investor's workflow that we currently don't address. And I'm not saying there's one type of investor. There's dozens and hundreds of different investor types, whether it be asset class or actual style. And so a momentum trader is going to get a very different service in the future from TradingView than a technical levels trader or a macro trader or a simple kind of volume trader. And so we're diversifying what you use on the platform and what you'll experience on the platform based on your needs and interests and how much you care about this versus this. And right now we're doing that. We're focused on the asset class side of things, but in a few months' time, we're going to start focusing a lot on, in a year's time, we're going to start focusing a lot on the different styles that people have and the tools that are available to them based on their styles, so that we can get more narrow into what people really care about. Because ultimately, if I'm an FX trader, I don't give two shits about what's going on with Japanese equities right now, right? Or maybe I do, but we should be able to make a very custom experience for each of these investors so that they don't have to kind of say, no, I don't like this. No, I don't like this. It's basically immediately obvious to them, the value add. And so that customization is on the horizon. So it'll be different for every investor, basically.
That's awesome. That's something that's extremely unique. I mean, I think TradingView, the position that you guys hold right now is unique because I don't see a lot of competition in that space. And I don't think anyone can do this at this point, just because of how much work it would take to actually get this much stuff done. Now, you guys also allow TradingView to be integrated on other people's platforms, along with allowing brokers to integrate on yours. How did that come about? Is that a recent thing, or is that something you guys have always offered?
So both are quite recent. Actually, I won't take a ton of credit there, but when I joined, basically, I was like, guys, why are we not pushing this technology out to the larger world? So in 2018, 2019, we started really ramping up the kind of the integration side of the business. and basically pushing our technology out to the wider ecosystem. The reason being is like some people will never want to use TradingView, and at the end of the day, I can only do so much to try to convince them that TradingView is the default platform for them. If I am a retail investor and I've always used Thinkorswim, and that's all I ever want to use, and I don't want to change anything, and I'm 55 and above or whatever, and like that's their philosophy. So we've come to realize that, and we're totally fine with it. What we're going to do, and what we're doing a lot, is basically integrating a lot of our technology to these other partner companies, and basically allowing them to piggyback on our success and our technology, but knowing full well that TD is TD, or Schwab is Schwab now, I guess. But it's so there's a lot of firms that will just basically they'll have their own way of doing things, and we'll do our best to serve. But we do think broadly that we'll give away a lot of what we do, but we won't give away the whole thing, right? So maybe we can license 80% of the value out to other third parties. But that 20% that really matters, that's only going to be on TradingView. And so people will end up coming back to TradingView to learn more and, dig deeper. And, we actually have some big plans around PineScript and actually licensing out PineScript to the larger industry.
Okay.
So more alerts and more Pine for throughout the industry as well. But we do want people to spend time on TradingView, because one of the big things is like the community that's on TradingView and the traders that actually like coalesce and talk and hang out. There's a great value in that, and we want to keep people there because that's where they're going to chat, that's where they're going to talk shop, and broadly speaking, share ideas from an investment standpoint. So kind of help the industry from a technology perspective, but we do hope that people maintain their service on TradingView as well. And so I think that one of the big things we saw was people spending all their time on TradingView, but then still having to go to TD Ameritrade, Schwab, whatever, to do their trades. And so that was kind of an obvious standpoint where it's like, well, why don't we just integrate them directly? And then that way they don't have to jump out to this other website and do a two-factor authentication and all this stuff. Like, just stay on TradingView.
I think we're looking forward to it. I think we're all looking forward to it. On behalf of the tens of thousands of traders that are going to end up watching this, Pierce, thanks for getting on the Expert Trader podcast. Huge fans of the platform. We're all going to continue to use it. We're really excited for all the growth that you guys have had and will continue to have on that side. If you guys want to hear more from Pierce, Pierce will be speaking at the FX Summit 2022 conference in Miami, May 13th through the 15th, right?
Yep, excited for the conference. It's going to be fun for sure.
For sure. It's going to have some more updates about TradingView and get a chance to speak to the community that uses this platform. Pierce, you're a busy man. Thank you for your time today. Really appreciate you getting on the show.
Awesome. No, thanks a bunch, guys. And like I said, it's always good to talk to traders. And broadly speaking, we're super excited to be involved for Miami. And keep me in the loop. I'm happy to come back and we can talk shop more.
Okay, looking forward to it.